please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Hello and welcome to our results heads up quarter se quarter tak. I'm Lata Venkatesh, with me Prashant Nair, and over the next half hour our research team will analyze the performance of 4 sectors for you: IT, auto, FMCG and pharma, to give their views on how these numbers may pan out. We also have some experts joining us. Prashant?
Nishchal Maheshwari of Edelweiss Securities will be with us. Gautam Duggar of Motilal Oswal is with us. And Sanjeev Bhasin of IIFL joins in. Gentlemen, thank you very much, all of you, for being with us here. We, of course, will start the sectors and the questions to you in just a bit. Lata.
Okay, well, first up, just an overall overview. Like in the past 4 years, FY19 is also seeing Dalal Street start the year with big expectations. The FY19 revenue growth is seen at 17%. This is an average of 2 or 3 brokerages. Profit growth is expected at 19%. There are many who are still sitting at 20 and 22. But the start, that is Q1 of FY19, could be muted. One estimate, for instance, Kotak says that the first quarter net income growth may be actually flat. And sectorally speaking, autos, consumer goods and pharma could be very good at 20-25%. But corporate banks, both public and private, will bring the average down, as of course will telecom company results.
Let's quickly bring in our guests right now, and let me take the first question to Nishchal there. Nishchal, I mean, just set it up briefly for us. This quarter, momentum-wise, compared to the momentum that we saw in the last quarter, how is it going to be?
I think it's going to be pretty strong this time, Prashant, given that we are coming off a quarter on a year-on-year basis where you had a demon issue actually last year. So there's going to be strong growth coming in. So our coverage universe is likely to grow at around 22%, whereas the Nifty growth itself is going to be around 17% in terms of profit. Similarly, on the top line also, I think 13 to 14% kind of a growth is what we are projecting. So I think on a Y-on-Y basis, I think it's going to be pretty strong.
No, what Q1 itself, you will get this 20-21% earnings growth, or does the build-up come later in the quarter 2, 3, 4?
So Lata, we have a 22% kind of earnings growth for our universe in the Q1 itself, and the full year we are projecting around 25% growth for the full year. So I think it builds up, yes, but I think Q1 itself is also going to be pretty strong. Okay.
Gautam, Sanjeev, coming to you in just a bit. Let's first get sector specific, and as always, it's IT that kickstarts the earnings season. So Rima, what should we expect?
First to flag off earnings as always, and IT has been a big outperformer. YTD rally of about 20% versus the Nifty, which has given a rally of about 2 to 3%. Q1, the boost will come in. A, it's a seasonally strong quarter, and secondly, on account of the currency tailwind. So the INR depreciation of nearly 4% in Q1 will reduce the impact of wage hikes as well as visa cost on their margins. In terms of guidance, we expect Infosys and HCL Technology to reiterate their full-year revenue guidance. However, there is a buzz of late that weak numbers will be reported by the likes of TCS, Tech Mahindra, as well as Infosys. Mid-cap IT performance could be better, so there could be about a 3 to 3.5% sequential revenue growth. Focus will be on the demand trends in the banking verticals. Any weakness there will be a disappointment for the sector.
All right, thanks a lot for that, Rima. Let's get to Gautam. Gautam, okay, IT companies, what would be your pick of the pack?
Hi, good afternoon. So I think this quarter is pretty strong, and I think around 14% growth we are projecting for our universe, which is at a multi-quarter high. For last 8-9 quarters, if I remember, the growth has been in a very low and a tight range of mid to low single digits, around 3 to 4%. So 14% for our entire coverage. Within that, the top 5 companies we are expecting at around 10-11%, but the mid cap we are expecting very strong growth. Now what happens in IT is TCS takes a very disproportionate share of earnings. It's absolute share in earnings is 40%, and what is more important is for the quarter we are expecting TCS to contribute almost 60% of incremental profits of the total IT profits that we are projecting for our IT universe. As far as we are concerned, we liked Infosys. We think that the post-management transition, the business change can bring in good momentum going forward. Plus the gap with TCS has expanded significantly, and capital reallocation has been the theme in the sector. Augurs quite well from the valuation perspective for some of these names, and of course currency, as Rima said, has been a very strong support for IT companies, and off late we have seen in the last 2-3 quarters that the commentary around digital has improved. Overall there is some cyclical uplift as far as the demand trends are concerned, and you superimpose currency benefits on that and operating leverage plus 25-30% growth for the digital business. It looks like IT will have a very strong quarter this time round.
Sanjeev, would you agree that the performance is maybe going to be a little bit polarizing? I mean, TCS top of the list and others sort of in a graded fashion fall down?
Yeah, I agree. But I would say something like 10% would be the growth which you could expect. Now, you've seen in the last few quarters the growth was relatively muted. But this quarter, I think, will be a standout on the back that there has been huge impetus from most of the U.S. tax breaks. The tax break which President Trump gave, and that may have initiated a lot of outsourcing of work for some of the large players. Also, Infosys stands to gain because most of its hedges are directly on the dollar, whereas the TCS has some lineage on the euro also. So for us, it would be HCL Tech, which could be the dark horse, given that last quarter there was a little bit of one client misgiving, and I think that could be a standout. We also think some of the mid-caps, particularly the likes of Mindtree and Tata Elxsi, because of their separate verticals, could outperform on the BFSI space.
Fair point. Okay, before we come to more questions to all of you, let's take a look at what we can expect from the FMCG space. Mangalam is waiting by.
Well, for most FMCG stocks which are already at record highs, the first quarter results, they're expected to be very good. And there are two reasons for that. One, remember Q1 FY18 had the pre-GST quarter where we saw a lot of destocking, and quarter on quarter we're seeing a sequential uptick in rural demand. So that is something which will keep all the numbers afloat. Most of the stocks have priced that in already, but remember we have to watch out for margins as well. Diversion moves out there. A part of the companies, the likes of paints as well as adhesives, which use crude, will have an impact on the margins, while the other companies, the packaged food companies, the ones which use raw material like sugar, wheat flour as well as milk, they might see a gross margin expansion given these prices have been coming down. Also watch out for the triggers for the remainder of this year. Strong rainfall, state elections, upcoming general election in 2019 is likely to spur demand. So on the back of that, as well as a lower base, we're expecting double-digit volume growth across all the FMCG companies. The leaders should come up for you on your screen, close to around 12%, 13%, as well as 11% seen for the likes of Hindustan Unilever, Asian Paints, as well as Dabur. For ITC, remember though, weakness in their cigarette business continues. We're expecting a 2% decline in the cigarette business volumes.
Gautam, where would you say the performance is likely to be the strongest across this FMCG space?
Prashant, remember, as he pointed out, 1Q FY18 had an extremely favorable base for all the consumer companies. So, and as it is, consumption recovery is going on very strongly. We just came out with a note a couple of days back highlighting the rural consumption story, and post the MSP price increases announced by the government with the ongoing good monsoon, hopefully, this consumption recovery should gather further strength, especially on the rural side, and this is something which we've been very focused on. As far as this quarter is concerned, I think you can choose anything. Everything is growing at more than 20%. But remember, if you look at a 2-year CAGR from June 16 to June 18, the growth basically normalizes. Because if I remember my base for all the consumer companies, there was a decline of around 2% put together. This quarter we are expecting around 24%. Now within that, what we like is the same old names. We continue to like Britannia, we continue to like Hindustan Lever, Page, Titan, Pidilite. Some of these stocks are going to deliver very strong earnings this quarter. Page should continue to deliver more than 30% growth even this quarter. Britannia, we are expecting more than 30% growth. Same for Dabur, Colgate, even Asian Paints and Godrej. But we all have to keep in mind that this is a quarter where the base is extremely favorable, and also we cannot stop but point out that valuations are not really favorable from a 1 year point of view. So you can make money from a 3 year perspective, but from next 6 to 9 months it's look a little difficult.
Okay. Well, what about you, Nishchal? Your picks, would they be more in the mid-cap space because the big boys are well priced?
Lata, we also continue to favor the large caps only, basically, and obviously they have an advantage. So I think the picks are not very different from what he's telling. Basically, I think we continue to favor levers, Titan and Asian Paints. I think these are the three stocks which we like in that space.
Still with us here, we are reviewing and essentially reviewing opinion and getting you previews on what to expect. Nishchal Maheshwari of Edelweiss, Gautam Dugat of Motilal Oswal Securities, and Sanjeev Bhasin of IIFL are with us. Let's actually talk about another sector which is essentially going to report a good set of numbers. Expectations are pretty high. Autos, what can we expect? Let's set it up with Sonia, who's standing by with the preview. Sonia, over to you.
Well, thanks a lot for that. It is expected to be a strong quarter for the auto sector. Stripped of Tata Motors, the auto sector is expected to post a revenue growth of almost about 25-26 odd %. Kotak says companies like Ashok Leyland, Maruti, M&M and Balkrishna Industries could lead the way in terms of revenue growth. Although raw material costs were higher this time around, the companies have been able to offset that through price increases, and hence margins have not been impacted by higher material costs. Kotak says Maruti's sales could go up by about 30 odd %. The profits could rise by more than 50%. Hero Motor could see a sales growth of almost 14 odd %, while Ashok Leyland could see a sales growth of almost 51 odd %. So it's only Tata Motors that could disappoint. Stripped of that, it will be a good quarter for the sector.
Okay, well, with that, to our guests, Gautam, to you first. You all have had a great eye for some of the two-wheeler stocks. Motilal Oswal, for 20-25 years has picked up some of these good stocks. But now fully valued, you think, or do you think that in spite of overvaluation, they continue to deliver both gains for stock markets and earnings?
See, Lata, what is happening in the market is quality is getting overpriced, and it's not a new phenomenon. It's been happening for the last 2-3 years. And that's our view, that next 12 months you've had to be in quality plus earnings visibility stories. And that basically means your choice of sector stands reduced to, consumption pack, autos, private banks, financials, and maybe to an extent IT. Rest of the sectors are still struggling in terms of visibility of earnings growth, while there are expectations, but they've failed to deliver. Coming to IT, I think it's one of our preferred sectors right now. And this quarter again, it's going to be a party out there, barring maybe Tata Motors and Hero Honda, because in the base there is a decline of 13-14% for our universe as far as earnings growth is concerned. And this quarter we are expecting 33-34% earnings growth for our universe. Now within that, look at Maruti, M&M, they're all going to have more than 45% earnings growth. Bajaj Auto also, which is a stock which we are incrementally liking more and more, is expected to deliver 32% growth. TVS 33%, Eicher 35%. So I mean, a quarter is going to be a big beneficiary. We've already seen the auto monthly numbers. You've seen 15% growth in two-wheelers, roughly 65-67% growth in three-wheelers. UV growth has been 20%, and so has been a growth in CV as well. So across the board, there is a very strong volume momentum. So the fear of commodity price inflation, impacting the margins is being compensated by higher volume growth and therefore a consequent operating leverage. So I think we are very positive on auto even now, notwithstanding the expensive valuations from a near-term perspective.
Sanjeev, but will that fear of a commodity price inflation-led pressure on margins come true? A and B, something like a Tata Motors, which is extremely depressed, and where there is no real expectation as well that there'll be, it's actually the excluded stock that everything else will do well, maybe except Tata Motors. Could we see something there on Tata Motors?
Yeah, that's actually a paradox, because even though their local CV sales have been very, very strong, The bigger large effect is all about JLR. And you know, from September, the Slovakia unit should be the added kicker. But for now, I think this quarter will also be painful, since they are also unhedged on the pound, and that again has gone into their giving that warning on Brexit and the, you know, encumbrances with that. But the rest are going to be outperformers. You've seen Bajaj Auto last quarter also indicate that the subcontinent sales are extremely strong on the export side. The rupee would be, you know, they would be one of the best proxies on a weak rupee. We've seen TVS Motor show a lot of traction on the volume front. Hero MotoCorp again now stands to greatly benefit because of the MSP. So sum of parts auto is the best, best variable industry which you have, given now that the MSP and the rural effect will also kick in after a very strong monsoon. So we continue to be overweight Maruti, Mahindra, Ashok Leyland, and the dark horses are the two-wheelers. Bajaj Auto, we have upgraded. We've reduced the rating on Eicher because of the competition on Royal Enfield, and Bajaj now gathering more steam. So Bajaj Auto and Hero MotoCorp could be the relative dark horses in the next 6 months.
What a huge bounce on the Ashok Leyland stock. Eye-popping. Two quick questions to you, Nischal. You know, at some point the CV cycle usually peaks off. Is it anywhere near peaking? And secondly, auto ancillaries. A very brief question for a large sector, but what would be the pick?
So I think CV cycle, I think we are in the somewhere close to the mid-cycle actually. And we are yet to see the industrial pickup happening out there. And as we see the industrial pickup happening, basically, I think CV should continue to do well in the next coming quarters. Though I think market has been expecting this kind of a peak out happening basically, but we expect that the CV cycle will continue for a few more quarters, and that's why we have Ashok Leyland as one of our top picks out there. Secondly, you said about auto ancillaries. Now, auto ancillaries, I think we prefer the tire sector as far as the auto ancillaries are concerned, because that's where we see that there is a strong demand coming through. Though I think on the within that particular sector, basically, CEAT continues to remain our top pick.
Well, actually, our producer was very helpfully suggesting Motherson Sumi, so I have to ask Gautam, Motherson.
Yeah, I mean, stock has corrected more than 25%. It is part of our top idea list along with Maruti and M&M. We are expecting very strong quarter from Motherson. Incidentally, for this quarter, we are expecting a 27% profit growth. So I would buy Motherson at this price.
Okay, the next sector is a sector where interest has come back, especially in the month of June, and a large amount of interest, although for the quarter, it's not, it doesn't look like very much, it's actually a little higher. Ekta is standing by with what to expect from the pharmaceutical space. Ekta, over to you.
Well, yes, for the pharmaceutical companies, it is expected to be a better quarter in Q1 FY19 as compared to previous quarters, and that is expected to be led by the domestic business, which is going to recover on account of a low base due to GST-led disruption. So around a 20 to 25% growth is what we can expect on average for domestic companies, and for US markets also, there is expected to be lesser pricing pressure, hence a year-on-year growth of around 5 to 6% in constant currency, but a possible decline of around 2 to 3% on a sequential basis. Margins should be aided by the rupee depreciation, regulatory concerns, and what the progress would be top of mind in terms of commentary.
Okay, that's pointing out to a very important trend. Until now, it was always US which was calling the shots, as it were. But as Ekta is very importantly pointing out, now it's going to be India-focused growth that might, wag the dog, as it were, the tail that wags the dog, as it were. Sanjeev Bhasin, what would be your pick? First of all, you think there's a long way for the pharma sector to climb, and what do you like?
Yeah, so I fully agree with what Ekta has summarized. And last quarter we saw three large caps, Lupin, Dr. Reddy and Cipla, Cipla is a local play, and we think they guided that the local business has been extremely strong. Now that was last quarter. This quarter it may more exemplify because of the base effect. And secondly, like you pointed out, most of the FDA issues being cleared, I would actually expect some of the US business to show traction. There, Dr. Reddy will definitely benefit from, aside from US, the European business and the other, the Russia and the area beyond that. And we think the dark horses are going to be stocks like Aurobindo and Divi's Lab. Divi's Lab will gain mainly on the contract farming, and Aurobindo on the injectable side should see a huge amount of uptick on their margins, which last quarter were slightly below. So for us, the pecking order would be Cipla, Divi's Lab, Aurobindo, and any decline in Sun and Lupin to be a buying opportunity.
Gautam, what would your picks be? Pharma?
Yeah, so Prashant, for the quarter, what is more important to look at is beyond numbers, what is the commentary and what is the guidance as far as new launches are concerned, as far as pricing erosion is concerned, because this quarter is anyways going to be very strong. The base was totally depressed, so we are expecting around 40-45% growth. Incrementally, the news flow has been quite positive, and the halal clearance has buoyed up the sentiment in the sector. For now, we are sticking with the large caps. We like Sun and Lupin, and we will take the call as things go along, because this is a sector which you cannot generalize. Each company has its own set of unique problems. So for the moment, we like Sun and Lupin. We're expecting strong quarter for Sun and very flattish quarter for Lupin.
Okay, we could have gone on, but we are out of time. Gentlemen, thank you very much, but we will request your time yet again next week when we will be analyzing stocks like NBFCs, banks, oil and gas, metals, telcos. So lots more to discuss, but here's wishing all of you a great weekend and a great earnings season ahead.